So how about this? This is friggin' crazy. The market's been pushing up into this news announcement. It just took out the ledges. Look at this tail in ES, MES. And we're at the highs across the board going into a news announcement. Although we're not up much, it's a couple of ticks we're up, but we just took out a whole lot of shorts. It was epic watching that little short squeeze there. I managed to jump in for a quick fade just for fun. So anyway, let's see. Let's put up the footprint so we can look at that. We have UB up here. We have price rejectors below us going into a CPI number. What could happen? Oh, anyway, so I'm going to give people a few minutes to drift in. I'm actually a little early, so let me throw an announcement up that the room is open and. Okay. Special events. The art is CPI is here. Room is open. Okay. There we go. Boy, UB's still up there. We keep leaving UB on this ledge and just keep pushing up. Well, you know what's going on, Jeff, on Twitter, that the White House scheduled a press conference about this number 90 minutes after it comes out, and everybody thinks classic Twitter bullshit that because Biden scheduled that, he knows the number is going to be good. And that's one of the reasons the market is pushing up right now. There's a lot of people buying into that nonsense. Like people know it's already, yeah. It's such not, the market is just professional nonsense. It's, I have to call attention to, I was having a conversation with this guy in our Facebook group, and he's debating with me whether it's the ultimate meritocracy trading, which was a post that I made in our Facebook group. And it's stunning to me. This guy wants to have a whole debate whether it's a meritocracy or not, or whether, there's people that have friends that are giving them information. I'm like, and this guy traded derivatives. I don't get that. I hope he shows up so I can talk to him. I invited him to this. I just don't get that kind of thinking. Oh, yeah, the markets are rigged. And our elections are rigged. Everything's rigged. It's a big global conspiracy by the Bilderbergs. This stuff is just hysterical. People, get over yourselves. Conspiracies are so close to impossible because people can't keep their mouths shut. That stuff is just, it's just dreaming. The world isn't that organized. Don't believe it is.
Well, the elections are rigged by design, but that's a different story.
Do they always do a PC for a press conference for big economic numbers? No, they don't. That's one of the reasons Twitter's all lit up, because he scheduled this yesterday, and or at least it showed up on the calendar yesterday. Everybody thinks he already knows the number. Yeah, exactly, Jeffrey. They don't understand that, yeah, there's big players in the free market, but the free market is a market, and every single attempt in history to control a free market has ended badly for the person trying to do it. You just, we talked about the Hunt brothers in a previous live session, trying to corner the silver market in the 70s. It doesn't matter how much money you have. It doesn't matter what your information is. You cannot beat the market. The market is bigger than everybody, and it's funny. We're living in the matrix. Yeah, exactly. Oh, and yes, to your comment, elections are rigged by design, but not in the way that, the nonsense we're seeing right now. The machines are sending votes up into China, and then they're coming back down for the other guy. The people that are, the comments are just, what is wrong with your brain, person? It's just.
Well, that's overtly complicated. It doesn't need to be that complex to be rigged.
Yeah,
it's
no,
much
all you have to do
than that.
Yeah, it's much simpler than that. All you have to do to rig an election is gerrymander the districts, and they do that all the time.
Absolutely, constantly.
Yeah, but and it's funny, the people that do the most gerrymandering are the ones that are screaming about elections being rigged, which is hysterical. Anyway, let's move on from that. So this is blowing my mind that we're pushing the highs across the board. I got a fade in here a few minutes ago on this move back, but I wouldn't want to get in front of this short. But the market clearly thinks that this is going to be good, and that's why Biden, scheduled his press conference, and the market doesn't, but enough people think so that we're pushing up. I'm really interested to see as we get close to the number, if all of a sudden, the book always just disappears. We get really thin. I'm just curious if we're just going to drop back into the range. It could be fun. Anyway, the long and short of this, let's just get to the setup here. I love to do these news related, swarming sessions. And they're based on a very simple principle. So let's stick with the simple principle. How big is the reaction to CPI historically? Can we start a trend in a direction? Yeah, you don't want to think in terms of historical reactions. This market is unusual, Jeffrey. So what's I think much more useful, and this is what I do, is I look at two sets of nearby extremes so that I can think, where might I want to play? So real quickly, I'm going to zoom out here on my fast ninja charts and just said, so this is yesterday over here. We had a pretty strong trend move. And then this is the overnight. So we're at the top of the range from yesterday. This is a really strong move. So, whether extremes, well, extremes are anything to the upside, and we'll get to that in a minute. And to the downside, certainly down to 3,900, that's 100 points down, if not a lot farther. So keep an eye on that. Meanwhile, let's pull over and take a look at a TPO view. We've got single prints below us all over the place as this is pushing up. It's making a huge tail. There's some old single prints above us. There's some old 4-week highs above us. What's an extreme right now? Probably 4,100 is a reasonable extreme to the upside. 100 points either way here, and this is ideal. This is totally ideal. So. Yeah, exactly. What we're looking for is this is the key. Amy nailed it. The idea here is, we're going to see a reaction. If the reaction is really extreme, sometimes I'll just fade it right then, but it's hard to do that pretty quick. It doesn't. If it gets to a real severe extreme, it generally doesn't stay there very long. You don't want to park orders out anywhere on a day like this. There's just too much potential range here. Yeah, could you put, a short up at 4,100? Yeah, you could do that, but I don't know that is a particularly good idea right now. And I never like doing that. I used to try that, you guys even saw me do that a few times in previous years, put orders way out. The problem is way out is just way too far away right now. And, if it was a reasonable distance, if we had a 30-point overnight range and, the extreme was another 60 points away, that makes some sense to me. But our extremes are just really, really far away. And let me show you one other view real quick while we're kind of warming up for this. This is the indexes with fib retracements on it, just for fun. Look at YM. YM is almost at a 70% retracement. In other words, it's above the ambush zone, and that's a really strong move, but it's still in this ridiculously big range. RTY looks similar, but it hasn't bounced as much. It's at 38%. Look at ES, also right about 38%. And, again, just coming into the bottom of the ambush zone, which is just above us. But look at NQ. NQ is not even at 20%. So if we're going to get a wicked upside move, where might it go to? Well, look at NQ's ambush zone. It's at 14,000, guys. NQ is at 11,508. So this is, do the math. That's a long way away, and it's within reason. We have been up there recently, right there. So I think this could be a really interesting and fun, news release and the reaction to it. But I'm not going to try to just jump into this and play it. Amy nailed it. I want to see the reaction to whatever the numbers are, and you give that a couple of beats to get baked in. Let the algorithms retune, and then we'll decide. If it's worth playing. If it's a really good number and we've got a crap load of momentum going one way, yeah, join it. Why not? But my default in trading news is to do nothing. It's to sit on my hands. If a good opportunity presents itself, I generally jump in pretty quickly without, thinking too much. Always with micros, never try to do this with minis. It's just way too much risk. Even a one lot in the minis, $50 a tick, 500 for 10 points, 100 points, $5,000. No, thank you. I'm just not willing to get that amount of size into this much uncertainty. But with micros, heck, one is nothing, and you can scale, certainly from there. So that's what we will do. So anyway, that's the kind of lay of the land. Let me see. I see a lot of comments here. No, I totally agree, Amy. There's a lot of people that think we have a nascent bull run going here. And, you could argue that. Look at the trend. Yeah, we are. At the moment, we are trend up. That pretty clear, particularly since that move yesterday. But, there's artifacts everywhere that we could revisit really quickly. So I wouldn't be in a hurry to short this. I might short 4,100 or 4,200 if we just shot up there. If for nothing else, just, when people go to take profits, that could be a good trade. But I have no preconceived notion. I have no bias. I don't think we're going up or down, although we're up right now. And we continue to take shorts out over and over again at the ledges. Whatever you do, you don't want to get in front of this short. So anyway, that's kind of the lay of the land. Let's see. Just reading through the comments. 4130 would be, that's not a bad spot. There's a zero print right below that. Again, it's I strongly urge you, Gaurav, not to pick out numbers. I know you're just kind of looking at an area there with that comment, but that's the problem with the whole idea of kind of support and resistance with a news extreme. The liquidity is thin, the volume increases suddenly, and support and resistance are nonsense. It's going to go for as long as it goes, and then it's going to stop. And where it does that, it might revisit an artifact or two, and those could be good places to play. But it's a little bit of a bias danger thinking that way. You kind of just have to watch what it does and see where it will define its own inflection points. Is what I'm trying to say. That's my opinion. It's based on a JP Morgan caller. Okay, I know you're into your options. I won't debate that one with you. Yeah, this is a real, Amy, I totally agree. If you want to learn a lot, trade this in a sim. Put up a sim and try to trade this. That is really educational. I'm going to actually trade it with some funded, with one funded account here. That's what I'm doing. And again, it's. I'm not going to take a lot of risk. If I can catch a good setup, I'll take it. And, at the moment, I'm going to let the market tell me what that looks like. I'm not going to try to predict where or when or how. I love that the shorts are getting run over up here. That could create a massive short squeeze if we get a good number. Remember the Challenger job cuts number was positive and the ADP was positive. Both of those looked okay. So those aren't always indicative of CPI or NFP, But I think that the whole economic, employment, interest rate, inflation, I think all of those things are in a state of flux that's going to just push us around. So anyway, you could play this. You could color this with options. I totally agree, but that's not what we're doing here. This is about trading it with the futures. So that's what we're going to focus on. Anyway, I don't know if we have any guests in yet. I don't see anyone I don't recognize, but if we do, welcome guests, welcome everybody else. Even Lee joined us this morning. How about that? Let's see. Any clues from Delta or footprint? Absolutely not. You cannot read into this. The footprint just keeps pushing up. We keep leaving unfinished business, pulling back, and then blowing right through it. There's unfinished business at the bottom, 3 price rejectors in a row here. I don't think you can read anything into the structure. It's, obviously it's also, it's Globex. Look at the volume, 166,000, very low. And also look at the liquidity as we go into this. It's going to disappear. It's already starting to. Look at the double digits. There's a couple of spots where there's, 100, but that's it. It's a really thin book. So, a big order hits or a group of big orders hit, we could move really, really far, really quickly. So, respect that. You have to respect that. Highest delta by price is below us. Yeah, these are backwards at the moment, the min-max. So I would be cautious reading anything into that kind of structure at this early in a news announcement. Gaurav, I think that's going to have to play out a little more. I don't know, Lee might disagree with me on that, but I don't think structures are real good tool right now. We're blowing through ledges over and over again, and whether there's UB or not, and there's been UB a bunch of times, we've seen some absorption and then blown right through it. I don't think you can conclude much from the traded volume. It's just too low and too thin.
Yeah, Jeff, for me, the only thing that's interesting is we've got a poor low overnight on the TPO, which has already played out. That needs resolving.
Yeah.
a few artifacts above us. But, all this debate about will it be long or there's this, there's that, it's nonsense. The people saying this on the chat are really talking nonsense, because it's going to react hugely, and it's not tradable until after the reaction. So people trying to guess what to do or where will it get to, on the daily, you can find some extremes. There are zero prints on the extremes, but all this sort of must hunt for this, people are missing the point.
Yep. I totally agree with that. This is a price. It's going to be initially price discovery, and then we're going to watch it get priced in. That's what's going to happen. And the trade will be, let the market find the inflection points. Oh, and it will. Trust me, it will. So anyway, I'm going to put my other dome back up in case I do try to trade this. And also, let's see, we have 2 minutes. I need to go real quickly. Biology break. I will be right back. I should make it for the number. Wow, look how thin it is a minute before the number. My gosh, we made it up to 20. Oh, wow.
And what's interesting about that, Jeff, that was actually a zero print on the daily from a week and a half ago, to the tick, it held.
Wow. Okay. And look at all the zeros up here. You think they found some stops? All right. Well, let's just watch this play out. I've got my session running on the other monitor. You guys can't really see it, obviously, but I'm kind of watching it. And there's a huge gap. Wow. Look at that.
We resolved the poor low, but in a very unconventional way.
Oh, yeah. And look at, God, there's just zeros everywhere. It's just, don't try to trade this yet. But obviously the number didn't please the market. Or at least so far. Let's see what happens here. We're not really down that much. We dropped 17. The volume is still really low, and the liquidity is still absurd. I wouldn't try to trade this, guys. It's, I say this a lot, but this is really true. It's happened to me countless times. When it's this thin, you can get a trade on and be right, and you can't get out with your profits because it's moving around so much. You can't place your orders at the place you want. That happened to me last week when we did NFE. I put an order in to sell 72.5. I got filled at 76, which was great. Instantly was profitable, and I couldn't put a trail in. I just had to hit the flat button and take profits. Yeah, as expected, 6.5. Okay. Well, we're kind of all over the place here. Let's see if this settles into any sort of spot we can trade. At the moment, I wouldn't want to trade this, but if it gets a little higher, I might nibble a fade. Not yet. It's just moving too much, and there's still not enough liquidity to try to get in and out comfortably. Let's look at all these zeros up here, and there's a bunch down there too, and we're below that. So, wow.
Well, the other daft thing is the low. It stopped within a tick of yesterday's. It's a value area boundary from yesterday where it stopped.
Yep. Here, let me get that's a good point. Let me get this up here. We can see kind of in the scale of yesterday, at least with the initial balance and the volume swings. Yeah, this is Amy's right. I totally agree, Amy. This is like weird. I'm like looking at this and saying, well, I definitely don't want to buy this down here. I might fade this big lump of volume at 90, but, and we just got back up there a minute ago, but this is just, look at, when ES is moving around by, a couple of points at a time, it's literally not tradable. And also, it's always a good idea to watch the LRCs when this is happening. And when, either of the short-term ones is as big or as wide as the 30-minute one, basically that's price discovery. We're trying to build a spot right here. You could argue you could nibble long down there, but boy, the risk is there's a lot of risk to do that. So I don't know that I'd try that either. Let's give this a little more time. It could turn out being an interesting trade here. At the moment, I'm still very sit on hands. I have when I trade these extremes, you guys know I have my little 3x5 cards on my rack on my desk. This is there's only one card up when we're doing these news things, and when I do these live sessions, it said think in expected value. That's a critical key point. If you're going to do this, don't think, well, I could get long here and make X amount. Think in terms of what's realistic. What could actually happen. Oh, look at this. We're building a little range right here. Let's see if that holds. Look at that. Let's see if that holds. That could be tradable. Yeah, it's moving around in there a whole lot though. So I don't know. A fade up here could be interesting along a lot lower down, but right now that whole, look at all that. This got bought. Let's put the footprint back up. Still pretty messy footprint. A little price rejection on the pullback. That's all right. Okay, right here is an interesting short just because of all that volume right there, but I'm not going to necessarily do that. Let's see what happens up here. Let's watch it. Oh, this is really fun stuff. Okay, right here, it's still not pulling back off that, so I wouldn't want to fade it. You know, if you look at this spot right here, it actually traded down to the edge of the range, and now we're back in the middle of the range. So let's see if we get a spot that might be fun to play. I liked the idea of fading this, except we're trading right through it at the moment. Let's see if it gets some more. There's some absorption right there, and it blew right through that. So at the moment, it's a really crappy long setup is basically what it is, and I don't want to play that. So you know what this is probably going to end up being, you know, because it's still really price discovery and it's moving around a lot. This is probably going to end up setting up a really good open. That's kind of what I'm thinking here now. I don't know that I want to play this here.
Well, if you look at the profile, Jeff, you know, we've got this massive excess at the top and the bottom. We're in the middle. Yep. We're balanced after the figure came out, so no one knows.
Yeah, we are. Look at that massive excess up there. We're totally right on the volume, the VWAP, the POC, and then, yeah, look at the excess going the other way. It goes all the way down there.
Each end has stopped somewhere sensible.
Yep.
So it could actually make for a good RTH session.
That's exactly what I'm thinking. This could set up a really nice RTH session, but at the moment, it's almost gambling trying to play here. Mm. I still kind of think, you know, somewhere up here there might be a decent short, but it's still going up. So, you know, we're approaching the top of the range. That's kind of why I'm thinking that. But you know, the ranges are subject to change quickly. Let's reset that and watch. See, we keep seeing this pattern over and over again. It gets absorbed, and then it goes up from there. You know, so it's absorbed into the bid and the ask, and then it bounces. And so, you know, equal side trading, it kind of forms a fulcrum. One of my mentors used to call that a fulcrum. And I get it's a really good word actually, because you know it can kind of go either way from there. Wow. Okay. Yeah, that's starting to play out as a decent short, but I'm not going to join that. So yeah, let's look at. I'm going to put this back on 5 minutes just so it's a little bit easier to read. Look at we traded right down. Look at the low. It's right on the initial balance low of yesterday. Right there. I mean, almost to the tick. That's hysterical. So, you know, clearly whoever's playing and can, you know, take the risk and play in this environment is respecting recent ranges, although it's a huge movement around that. You know, if nothing else, it's always really educational to watch this when it's happening, and it just really gives you a good understanding of the auction. You know, that the market truly is an auction. You can really see it happening when we're in this condition. Anywho, we'll keep doing this for maybe till about quarter of or a little bit past that if it gets interesting. Boy, I called that one right. I should have just done it. That was a nice short. Right back to the high volume. Let's reset this and see what it's doing there. Okay, trading into the ask, trading into the bid. Back two-way trading right there. Now we're bidding back up. Okay. Interesting. God, look at this mess. We're filling in some of those zero prints right now. Where's the top of that zero print range? It's right at 4,000. Surprise, surprise. Okay. So that was a nice little push past that up there at around 4 or 5. Yeah, you got to really be careful if you're going to trade this. Right now, it's a nice little short you could be riding, but I wouldn't, you know, if I had profits, I'd protect them pretty hard. It's just moving too much. You know, when it goes down to 88.5 and then trades 93.5 seconds later, you know, that's price discovery. You know, yeah, you can grab ticks out of it, but you're asking for trouble. That, like I said when I did the NFP session last week, it cracked me up. I mean, I had a limit order 72.5 that filled at 76. Limit sell. And cool, that was nice, but you wonder how that even happens. Yeah, the fishing trip should be a blast, Lee. This could be a perfect day for the fishing trip.
It might be a very cautious one, though, because the price action the past 2 days has been really weird. It's been really. I made the comments to JVC privately yesterday. It's sort of lumpy. You can almost see like a heartbeat going on in movement. It moves 3 ticks, pauses, moves 3 ticks, pauses.
Yep.
And I'm interested to see, now we've got the figure out of the way, are we going to get some smoother movement coming?
Yeah, that's a good point. And so far we're not. Look at the tails on this TPO view here, and the volume is perfectly symmetrical in the middle of it, which is right where we are. And we tapped that. Remember that old 40-20, the single prints up there? That's been there for a long time. We've had them a few times. We tapped it. It didn't trade
within
it.
A tick. Yeah. It still teased it, and that's also 0 print on the daily. So these are interesting things, but it's going to be. I think we've got to see one of the overnight ledgers taken out during regular trading hours to then have an idea of what the day is going to be like.
Yep, I think that's true. And gosh, there's going to be some, even if it just heads toward, a good objective, there could be some really good trades in RTH based on this. The range went from being relatively small, except for those ledge stop outs. Now we have a decent size range. It's 66 points on ES. Obviously, they get much bigger than that. The volume is still really low for an economic number right before the open to only be at 275,000 contracts. But remember what I said about this on Monday at the IDES. I brought this up, and the hedge fund guys just immediately every single one of them came back at me and said, Jeff, really good explanation for that. We are all sitting in cash. When there's opportunity, we will jump in with volume. When there isn't, we're on the sideline. They all agreed on that, and these are all guys slinging reasonable amounts of money. So, you really got to respect that. And that was the theme. Remember, I said there was two conversations from that discussion. The main one was, this is a event-driven market. The opportunities are being created by events like this. And that's exactly what Lee just pointed out. It could create a really good RTH setup. And watch the volume. When the volume starts increasing, and the liquidity fills in a little bit, that's when it will get more interesting for us. Let's see what the liquidity looks like now. Still really thin. Double digits.
These are interesting, Jeff, on all the markets. So YM has done pretty much identical to ES. It's gone up to a level, just tagged it.
Yeah, right there.
UB, 0 print, whatever. But RTY and NQ above them, they haven't gone. Well, RTY has gone beyond the equivalent thing that we'd be looking at in YM or ES. And NQ, the high's in no man's land. So it kind of gets me thinking maybe, NQ leads and we go up and NQ drags us up. But it's going to be managing risk today, which is going to be hard.
Yeah. Yeah, there's a lot of people that think, that tech is oversold, and, if interest rates don't continue to go up, then, tech is very responsive to interest rates. And so that's certainly a reasonable thesis. I'm looking at all this and saying, I just don't have enough information, but it's so close to being really ideal, So I'm really looking forward to RTH now. I think the open 5 is going to be really crazy. Could be very one directional. Again, if you decide to trade the open, understand the whole notion of the open 5 idea is momentum, and this kind of condition can create some really severe one-directional momentum. And I will tell you right now, there's only one way to trade that. Join it. I'm talking about the open 5, After 15 minutes, disregard that statement. But if we have strong movement right at the open in one direction, again, one of my mentors has a really good way of describing that. He would say, cover your eyes, hold your nose, and buy it. Go with it. That's you just forget whether it's reasonable or not. Just jump on the momentum, because the open could be very momentum driven. Notice how the volume is picking up a little bit now. We're finally getting some volume coming in. And some people always ask me what would be typical. Well, this time of year for this time of day, this number, instead of being, below 300,000, would probably be closer to 500,000. That's how low it is. It's relatively, maybe 30, 40% lower than I'm used to seeing it on this kind of, this time of the year and this kind of event. Close your eyes and get long. Yeah, if it's going up, if it's going down, you can close your eyes and get short. At the open, that is a very powerful way to just go. Lots of fooders on TikTok buying tech stocks. Of course, they're buying the dip. That's all they know. Yep, the range is now at 766. Interesting. The ES and the MES range are slightly different. Which, at this time of day, the arbitrage isn't as efficient. So you sometimes see that. Excuse me. All right. So we now have 15 minutes of this getting baked in, and it's still trying to figure out what it wants to do. We cleaned up some of the zero prints, not all of them. And now we're going the other way again. I think there's some more. Oh, there's some more at the top. Those are stops. And yeah, I don't think I want to do anything with this until I see how RTH opens. Let's see what if I look at where we are, we're right on one of the pullbacks of the trend from yesterday. And we closed at the high yesterday. That's pretty unusual, particularly going into a number like this. Whoa, we just started moving around radically again. What's all that about? I don't think there's any earnings on tap or anything. Whoa, look at this. It just all of a sudden decided to get busy. Huh. Another number released. Okay, what number was that? They're all at 530. What number are you talking about? I saw them all come out on 530, so. Not sure what you're talking about, Jeffrey. I don't see a new number now. There's nothing now until 7:30. EIA.
There's a speaker, Harker.
Oh, speaker. Okay, so we've got all right. Talking heads. Yeah, that's different. That's not a number. That's talking heads. Yeah, that always creates volatility. Yeah. So anyway, gosh, look at this. Look at there's a lot of little tiny things you can see in the VWAP extremes. They spread out obviously when the volume increases. And see how they're curling in on both sides. So basically we're starting to accept value around this spot, which has been going on for a while, and that's why they're doing that. And this is the kind of stuff I watch with these extremes. I don't trade at them necessarily, but I like to see the behavior of volume as it plays out. And again, my whole approach to trading is statistical, standard deviations, ranges, short term. That's what LRCs are. The same thing over here. Just are we at a spot that is far enough away from where we were that we could trade back, or are we going strongly enough in one direction? We had a bunch of really good range scalps yesterday. I posted a bunch of images in the Scalping Micros stream. It turned out to be a really, really good day, but it requires one being nimble. Look at the overnight here, and then boom, this is when the number came out. And so, obviously the LRCs expanded dramatically because the range did. And now, we're working a fairly tight little range here. I think RTH could be really tradable. We have a nice, acceptance of value, at least in ES. NQ is a real mess. Look, big volume up there. Look at this keeps going down. I can't even scroll that far. It keeps wanting to reset me with a 50 tick reset. So anyway. Yeah, we are basically flat, Amy. And see the volume is finally getting going. We're at 322 now. Somebody texted me and said, what would normal volume be at the open? Well, we should certainly have 500,000 by 6:30 my time. Another 20 minutes. Easily. If it slows down, we don't keep pushing the volume, then price will probably stick to value. The volume going up and the liquidity being thin is why we're moving around. And this spot continues to look interesting. I'm going to reset that so we can see the traded volume right there just for a few minutes. It's right on the VWAP. Right, 2 points off the close yesterday. Not even a rounding error. It's You could literally call it the same number. So interesting stuff. Yeah, there's some good scalps in here, Amy. I totally agree, but I think the big opportunities are going to come in a little while. When remember the times of day that I segment, guys. The overnight is over. Obviously, numbers are part of the pre-open. What I define as the pre-open, which is about an hour and a half before the open. Certainly the last half hour, and we're about to go into that last half hour. And the reason that I consider that significant is that's when funds that don't trade overnight start coming online, and they start trading. I was talking to somebody this morning, and hang on one second. So I'm getting interrupted here. Okay, sorry about that, guys. Oh yes, many things can happen before the open here. But anyway, the whole idea about the pre-open is, large equity funds don't trade futures for money. They hedge with futures. And I'm sure a lot of them are starting to do that now as we go into the open based on this movement, whatever their model says. And the other guys, the 3 participant groups, us, big giant institutions using futures to hedge, and then the hedge funds that are smaller and are not, I'm not talking about mutual funds that trade very much like we do, just with more size, more aggressively, better tools, better mathematicians, et cetera. And those guys are coming online right now. That's what I'm talking about. So many of those guys trade overnight. They almost all trade the news, the hedge funds. They love trading news. So, 10 minutes till the top of the hour. Yep, talking heads. I'm just looking at, like inflation is over. Yeah. It's funny listening to all the different Fed people. Generally they're kind of on the same page, but they all have to make their own little mark, And also it's important to understand that the Fed's divided into districts, and these people are from different parts of the country that are often in different economic situations. So, one Fed governor's opinion can differ from another's. That's why they meet and they discuss it. And that's why the minutes are looked at so closely. Who was on what side of the argument, why? Maybe they know something about their district, for example. They probably do. So that's always interesting to keep an eye on. There are a lot of people saying inflation is over, or we're done. It's not going to go up worse. Remember, I told you guys back in the summer that there was 2 guys, one very experienced in the hedge fund group, that were saying that they thought the Fed might even pivot in December. That's that group that thinks that, this is it. We're done. The increases are over. Inflation's not going to get any worse. I don't think the consensus agrees with that. But, everybody has an opinion, and they're not very useful. So trade what happens. Thank you, Jeffrey. I remember when I have an economics degree from UCLA, economics and Asian philosophy. How's that for a balance? And I remember when I first got into economics, this is a real quick story just to supplement what you just said. Thank you, by the way. When I first got into economics, the first 2 classes you take as an economics major, you take, 1A or 101A and 1B or 101B, and those are microeconomics and macroeconomics. And it's presented to you so scientifically: supply, demand, the fiscal policy, monetary policy. And, after you get done with those first 2 classes, you're like, oh, wow, the economy is really easy to understand. It's really predictable. And then you start taking your other class, and you realize that everything you thought you knew from the first 2, and this is typical with anything, but in economics, it is so true. So I got to the second year of my economics degree, and because I had tested out of some stuff, I was almost finished with it in 2 years. And so I started looking at other stuff, and I'd always been interested in Buddhism and Taoism and Asian philosophy. So I double majored that, and God, it was such a good balance. I'd be in these economic classes and they'd be telling me how, the economy is scientific. And then, I'd go to my Asian philosophy class on Wu Wa, which is a form of Buddhism that believes that it's like the Matrix, that everything is in our minds. and that, reality is what you perceive it to be, and everyone's reality is different, and there is no such thing as a reality. It's, reality is the subject to the observer. And I thought that was so cool. So I go back to my economics class, and one day I brought that up in one of my economics classes, and I said, we're trying to build a science around something that is essentially the behavior of people. And this was in 1978, 79, and behavioral finance didn't really exist. Those of you that know what that is, that's, how people actually act in financial situations. That discipline was just getting started. People were just starting to study that. And it was believed to be much more scientific in those days. And in graduate school, I had a really good behavioral finance professor who had a psychology and psychiatry background and was an economist. And he was a really good person to learn about that from. But anyway, the short comment to you, Jeffrey, is everybody knows a lot about economics, doesn't really know anything, but if they're good at it, they know what they don't know. Wow, look at this. Now this is again looking like a potential short. A little bit of absorption right there. What time is it? Oh God, I'm tempted to fade that. You know what? Let's do it. I'm just going to grab a short there. Let's see how far this goes. Just a micro or two. Ooh, poop. Okay. Oh, that's right. But let's throw another one in there. That's kind of a 1+1. Let's just see if we can move back into the range. A little bit of absorption here. I'll take one more. 7. Yeah, looks like I'm going to get run over here. So let's get out of the way, I think. Well, wait a minute. This might be swarmable. We're at the top now. Yeah, this is swarmable. Again, I have 2 swarms now. I have light swarm and then I have big swarm. This is big swarm, where I'm, if we're at an area that's so obvious, I'm willing to scale into it for a while. And this one I might get out of the way. But again, this is in an account I'm willing to play a bit in. Let's see what we can do with this. This is the most recent volume right here around 10. So again, I'm just kind of having some fun with this. Down $100 there, $130. That won't kill me, but we are going up. Look at this. And the volume is picking up. I might get out of the way here. Let's see. Nope, there's the push down I wanted. Okay. Yep. Wow, this is so volatile, guys. You have to see, I can take money out of it, but look how much I had to scale. And, I was off sides by quite a bit here. Oh, and I got one left. Let's protect that one and see if we can catch a roller back down to the high volume node. Oh, sweet. We are. Put that stop at 10. So went off sides by 130. Now I'm profitable by 70. So again, that's why R to R is nonsense. This is a really good trade. And the R to R was totally backwards. But in scalping, it's almost always backwards. If you didn't know that already, you do now. That's why R to R is nonsense. A good scalping setup, has a negative R to R, but you're right there. JVC nails this when he explains, and he has a number of times, the difference between the price risk and the information risk. We don't know what's going to happen, but we know where we're wrong really clearly. And, that's a really powerful situation. That's why I took that trade. I didn't necessarily think I was right. It just looked like a really good spot. Definitely for a swarm. You never get in with one contract at the right spot, but what did I have, a 5 lot there? No, we had a total of 8 and we made $78. I'll take it. Yeah, I think I'm just reading the comments. I think the most important thing to understand about the Fed is the fact that there are districts. And that every district has a different economy, and that's why there's the Fed works that way. And it's not uncommon at all for particularly back when the Rust Belt was kind of disintegrating, for there to be completely different economies in the different Fed districts. I don't think that's as much true today, but there's definitely differences of how the Fed governors perceive their situation and what the right answers are. If you looked at the Fed minutes at all, that was pretty clear. But I think they're pretty much still on the side of raising rates. And I don't think inflation is done, but that's just my personal opinion. You're offering 40.35. Okay. Any particular reason why that price is so important? There's some stuff up there, but if you learn nothing else from watching me, Gaurav, the notion that inflection points define themselves when we get there, as opposed to having, well, let me rephrase that. You said you want to sell up there. Do you have an if then else of that? In other words, what if, what's the opposite of that? What would you do if you did that and it went wrong right away? 80 options move plus loss. Okay. That's still option stuff. Yeah. We've had this conversation before, so I won't go into it again. I respect what you're doing in options, and I realize there's certainly an edge there for people that understand it. I have traded them in the past fairly successfully, don't anymore. But the futures market doesn't work the same way. You really have to think about the futures market differently. You can do trades with options against the futures prices and whatnot, but the futures market is its own animal. It really is. I every time I see those comments, I think that, and I really want to emphasize it, and I'll say that and leave it at that.
And I've got to say, Jeff, on these calls and also the others, for me, I don't care what someone is doing, especially if it's not just at price level. Yeah. If I may be vaguely interested in, I've done this because of X and Y and Z, if it relates to stuff we teach in TRG, but just, glib statement of I'm long here, I made X ticks, or I've got an order here, could not care less. It's noise.
Yeah, I agree with you. I like to kind of hear what people are thinking and what they're doing. When Amy's telling me, she's scalping ticks or whatever, I don't have a problem with that. But I get, it's a different style and different, and that's, the options conversation probably isn't all that useful. But yeah, I keep coming back to this idea that people are picking prices as support and resistance, and I don't agree with that. Inflection points are self-defining. Like we just formed one right here at 18, 7 and 17.5 by 18. Why? Well, who cares? It did. It traded heavy volume both sides, and then it went right back down. Clearly there's somebody passive there that took everything and we turned, or some group of somebody's. But we have UB at the high of this rotation. We have UB at the high of the pullback, still have some stops up there. So, anything can happen still. But
yeah, we've got potential inflection points, but all that matters is what happens. And just to, pluck a number out because of X and Y and Z and commit to it.
Yeah.
Without seeing what happens there, or what gives you a really strong business case to be interested in that level, which is going to be based on what has happened there.
Exactly.
It's nonsense. You might as well spin a roulette wheel.
Yeah, I agree with that. I also, one of the things, I've had a lot of conversations with people lately, just quick one-on-ones, people that are still, one price level. I just, in this kind of volatility, I don't understand how you can look at a price level. And again, until we get there and trade it, we really don't know. Yeah, there's some really interesting artifacts up here, but what could happen? Well, we traded up here and we're back up here. We could blow right through these two single prints, right through that poor week high and be at 4,100 and never look back. We could go to 4,500 on a massive short squeeze. And, it'll plow right through any levels anybody's got if it's doing that, just because it's, it's demand, it's pushing. So anyway. Delta by price right now, Gaurav, is not going to tell you a lot because we're still exploring. Yeah, it'll tell you about that moment right there, but drawing conclusions under these conditions like you would draw during RTH is a mistake. During RTH, the structure is much more predictable, because everybody's playing. That's a really important point to make right here too, that I don't make enough. The EF, the MEF, all these things, these indexes are derivatives of the equities. The equities are not trading. This is all speculation on what people think the equities will do based on what's happened. But until they actually open, it's purely speculation. And, I'm a speculator, so I love that. But that's why I just never have absolutes or even support or resistance levels anymore. I mean, I did that 20 years ago when I didn't have order flow. But the minute I replaced that with order flow, my trading got much better. And also the moment that I stopped trying to just pick a price level and get in, and if I'm wrong, get out, being able to scale a little bit with micros was game changing. And, my game's good. So when I say game changing, that's, I said this back when I started the swarming thing. This is the most profound improvement, swarming, the idea of not trying to pick a level, but trading around a big level with scaling in and out, as my buddy's model helped me understand. That has had the best improvement I've had in my results in over a decade. Again, I've said this a few times. That's not hyperbole. That's a true statement. And, I have a good equity curve. I've been doing this a long time and I do it pretty well. So to make a statement like, that's like Max Verstappen saying, in his Formula One car, saying he found 10 seconds extra per lap. It's people would just say, no, that's not possible. It was almost an 80% improvement in my P&L almost immediately when I started doing that. And now what I'm doing is I'm working on different combinations of ES and MES under different conditions, because I was just going to MNQ when when I first started understanding swarming, and now I'm understanding that there's times that swarming MNQ is ideal, particularly with a lot of movement. But if we're really thin and ES is trading like NQ, then MES is actually a better instrument to swarm because it's a little more predictable. If you want the movement, use MNQ, and that's typically good once we get a range established and you can play the range. We did that a little bit in the session on Wednesday morning, but right now, no, not yet. Everyone's still trying to figure out what's going to happen when we open. Let's see. Yeah, it does feel like we're going higher, doesn't it? But every time all we just did was take out all the zero prints. We just filled those all in. We took out that big chunk down there, the stops up here, the zero prints down there, and now we're building a range. I don't know. I still don't have an opinion. On any other day, I'd be fading up here. Today, I'm not going to do it, but we're not up that much. We only have 24 points, guys. Here's the extremes. This is the Globex VWAP right here, and these are the Globex extremes, SD1 to SD4. That's my Thinkorswim view, which is just easy to see that on, and then an old proprietary trend indicator that I coded with somebody else. That's kind of useful on a 1 minute. I don't trade off that, but it kind of gives me an idea, if we're trending at all and how strongly. So let's see. I see a question. What is the statistics on people trading support and resistance? Oh, I don't know. I know most people that try to trade that way don't succeed. Let's see. Let me read the rest of them. Thinking going against the majority that don't trade that way. Most people do not trade the way we do, Jeffrey. Order flow is still relatively new. There's people that put order flow as a hashtag in their comments on Twitter and other places, and they're not trading order flow. They just know it's a buzzword. But I don't think there's a great number of Lee and I have talked about this a lot, just trying to understand how big TRG could be. Hardcore order flow traders, there's probably 10,000 or less. Jigsaw has 6,000 licenses, TT, 5,000. There aren't that many people that do this. It's pretty specialized. It's getting bigger, but most of the new people don't understand even what the terms mean. And so that's why you see so much nonsense. Let's see. Do I fade the standard? No, I don't fade them necessarily. I just look at them as Gaurav, as a measurement of extremeness or the lack thereof. So I wouldn't necessarily fade this, but if we got up to say SD3 and I saw it getting sold, then I'd say, okay, we're extreme and it's getting sold. So, thinking in bets, that's a good place to fade it. That's how I use it. I don't look at, when it gets there, I'm going to fade it. It just gives me a measurement of the degree of extremeness that we have. Because order flow is difficult. Absolutely. You have to study, and people don't want to study. Well,
order flow isn't difficult, but it's people are lazy and want quick wins, and TA is appealing.
And they want a magic tool that turns green when they buy and turns red when they sell. And order flow doesn't do that. Order flow tells you what's happening, and you have to decide what to do with it yourself. And that's a really good point.
It requires study and work, practice, and a bit of application of intelligence. Yeah. And most people are stupid and lazy.
Yep, that's true. In the financial markets, it never ceases to amaze me. People come into the financial markets from whatever they did or do, and they think, how hard can it be? You know, I've told these stories a million times. My neurosurgeons, two rich neurosurgeons, proceeding to throw away close to $10 million trying to learn how to trade futures. How hard could it be? I can operate on a brain. How hard could this be? Harder. You know, you weren't, when you were operating on a brain, you didn't have some little voice in your head saying, oh crap, should I cut that there or should I cut it over? I don't know. No, you've done it 10,000 times. You know exactly what to do. It's a procedure. It's a process. You know, you do it. You're an expert
on
at
top
it.
of that, when they were operating on the brain, they didn't also have a monkey on their shoulder going, if I cut it into 4 pieces, I'm going to get double the fee.
Right. Exactly. And, yeah, and I've told this story before. These two guys were a real interesting coaching experience for me because one of them was just a pure gambler. He just loved betting, and you know, I immediately spotted that, and so did his partner, and they both said, you know, you need to go to Vegas, not trade. And the second one actually really tried to understand, you know, risk management and all that. He really wanted to get it, and gosh, it was a good year of coaching that I worked with them on and off. And even more than that, it's about 18 months. And he finally said, okay, I totally get it. And now I get why I'm so crappy at it. And, you know, he stopped doing it. But, you know, they threw away a lot of money thinking, well, you know, how hard could it be? You know, the locals, a lot of people don't know this either. The locals on the floor in the CME, the vast majority of them were high school dropouts or barely made through high school. They were just really good at understanding short-term order flow by hearing it and seeing it. And that's why so many of them had trouble making it to electronic, because they couldn't understand the basis. You know, when the pit got noisy, they knew something was going on. You know, watching on a screen, it's different. You have to really, you know, there are no indicators that tell you the right place to buy and sell. What they do is they tell you what's going on. You have to make good decisions. And so, you know, like to Gaurav's question, no, I don't necessarily fade, you know, at one end or the other of extremes, but it sure gives me a clear idea what's going on, doesn't it? You know? And so that's powerful. But yeah, the danger, like, you know, here, this is really clear. Look at this. The first time we touched SD2, we plowed right through it and got to SD3. You know, that was a massive difference. So, you know, you have to trade what's happening right now. Okay, liar's poker, yes. Oh yes, yeah, the open outcry environment was very, very, very interesting. VWAP is the most under-marketed indicator? God, I don't think so. There's a whole bunch of people on Twitter selling VWAP services, and there's that guy VWAP trader who, you know, you revert to the VWAP. I'm like, really? You never had a statistics class, did you? You can't revert to an average. It and the price attract to each other, you know, but it's the price. The average is the history, you know, and I hear that over and over again. And I'm just like, statistics 1A, you know, that you don't have to go to college to understand that. So anyway,
also,
I digress.
The idea of VWAP being an indicator. VWAP's a calculation.
Exactly. It's a metric. Exactly. Yeah. It's just like R to R, which again, look at that backwards. Look at your trading history. Did I respect risk and did I push it when I had an opportunity? But there's no magic ratio, 3 to 1, 2 to 1. You know, we don't revert to VWAP. Well, they say, well, we're doing it right now. No, we're not. The VWAP has been relatively flat. Price is exploring above the VWAP. That's what's happening. Anyway, so let's see. Yeah, he's actually, you know, he's got some decent, he knows the market. He was I don't know if I think he was an options market maker. He's got some professional background in the market, but he constantly makes that statement about reverting to the VWAP. And I challenged him a few times and he blocked me on Twitter. You know, so there you go. You know, I just said statistically that doesn't make any sense. And, you know, he tried to argue with the Furu type argument that, you know, here, look, it did it right there. Like that means something, because no, that's not what it did. Anyway, in this case, this is really clear. You know, you can't not understand that if you understand how the market trades. Let's see. Boop, 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 boop. Institutions compare how their orders are filled. Yes, they do, and that has nothing to do with us, Gaurav. That's over periods of time or an order. Like somebody has a 2,000 they want to fill, they'll measure fill efficiency by the VWAP, but they don't. No more than that. It's nothing more than that. It's not. You said that exactly right. They compare their fills on intervals that are relevant to them and have nothing to do with the rest of us. So it's just not. It doesn't. One doesn't lead to the other. One doesn't predict the other. It's just statistics. It does that because that's how math works. Again, in stocks, it's not that much different. The auctions are less precise in equities because there's market makers who get in the middle of the auctions. But they do that in the futures too, Gaurav, and they do that in currencies. They do it in everything. But again, that really doesn't have that much to do with us. Measuring fill efficiency, if you're an institutional trader, some of them get paid that way. But is that going to impact whether it reverts or not, quote unquote? No. It's like this dark pool stuff. You see that all over Twitter and oh yeah, you can see in the dark pools and you can figure out what's going to happen in the futures based on that. Well, first of all, you cannot see that they're dark pools because you can't see them. There were institutional traders trade anonymously. And so, again, by definition, the argument is nonsense. And, but there's guys selling, $1,000 a year indicators with 75% affiliate fees, and that's all over the internet. And there's people, heck, we've had people in TRG that were promoting that. I've seen them over and over, and it's nonsense. Anyway, most of the market is nonsense. Well, it can't revert to the mean. Again, by definition, the mean and the price converge. Price generally, price is what's important. The average of the past isn't that important. But yeah, it's a metric for various things. All right, so we've got, this is exactly an hour from when we started, or plus a few minutes. I think we've kind of beaten this horse to death. I'm really, really interested in watching Mr. Lee's fishing trip today. Is that starting at 10 Eastern?
Yes, it is. B periods, and it may well be a sit on hands or just one or two tick scalps on ES. Very hard to say today.
Yeah, clearly it's a tricky environment, but I'm just going to be interested to watch your structural view of it. And what I always do, obviously, is I look at my price action and I look at your structure and I kind of compare notes, and I always find it valuable. So anyway, for the rest of you, if you haven't been to a fishing trip, by all means join us. And otherwise, I will leave you with one simple comment: be really, 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 really nimble and do not have a bias here. Gosh, it looks like we want to go up, and then we trade right back to this high. Look how this high volume node is really getting big. I mean, value is really fairly well defined there. Look at the look at the volume profiles here. Let's crunch this together. We had all that volume right there, and then this is that last bar. So we're right on the volume. We're on the VWAP. We're on the POC. We're on the high volume node. The market is more or less agreeing here. But look how far we've been recently. So this is definitely a cool environment. I continue to love the trading we've had, but I've noticed I'm sitting on hands a lot more. The number of trades I'm taking is less, but they're producing better revenue. And one other thing, if you're copying, I cannot say this strongly enough, particularly if you're like me and you're dealing with internet outages and power outages because of the storm. But I have now found that over and over again, I have 20 accounts across the board, plus some funded ones on top of that. And anytime I'm copying more than a few of them at a time, it's a bad idea. I'm finding that there's what I've done is I've divided them into risk groups. And, if it's a high risk situation, I'll play these three. And if it's, my 25Ks that I'm just scalping, $200 a day, won't touch that. I'll wait till the range is really tight and I'll just pick off ticks and throw that in the 25K accounts and copy a couple of those, but never all of them at the same time because, one event, you blow them up. I know some of you have problems with copying and blow ups and rhythmic. And so I'm just suggesting that, get yourself a portfolio of evals to trade when they're cheap and on sale, and don't trade them all at once. Don't copy them all at once. When the market's going your way, then, add more copies. That's what, if I'm trading really well and RTH is really predictable, I'll amp it up from 3 or 4 of them to maybe 6 or 8 of them, but the last 2 times I was trading all of my copied accounts at once, I either had an event that blew them up, or I had a really bad drawdown that I had to recover from because something happened. platform or power or, something in the market, whatever. So if you are copying, it's leverage, and basically think of it like sizing. You should scale up and add copies when you're in the zone and you're making money, and when you're not, go to one of your more risky accounts or a sim and learn, practice. I think that's really good advice. Yeah, I don't know what Lilu is doing, Jeffrey.
That's just those new silly
the light one or whatever they call it.
Yeah, they're trying to appeal to the people that have absolutely no budget, which I guess, if you're doing this and you can't afford $100 a month for, that maybe you shouldn't be doing it. I don't know.
I think Lilu has decided that their market is the second and third world.
Yeah, very much could be. The more I listen to Chris, the more, I kind of feel like he kind of knows what he's doing, but I also think he really missed the boat with the Apex move. And I sent him a message about a week ago, and just I was asking if he, if they understood, Apex. I don't even know if he knows. I assume he does, but Apex has all these other businesses, the indicators and rooms and boot camps and, Discord channels and what have you. And he's not going to be able to compete one-on-one with that, because, they can basically offer evals for nothing. It's a loss leader for them. They sell them at the cost that Rhythmic charges them to put them up, and everything else is a profit center. So he used to respond sometimes when I would send him messages, and they considered Apex to be a direct competitor, and that's what I asked him. I'm just not sure he still understands. And I asked about that, if they were going for the third world markets, or the really low budget people, and that's obvious. So anyway, I'll let you guys know if he responds to that. He generally does respond. Usually doesn't do it right away though. So.
Well, Apex without Lilu. Yeah,
they have, exactly. Lilu did to Top Step what Apex is doing to Lilu.
Yeah,
that's my view of it. Yeah,
although Lilu have always been weird.
When they
launched, the website was weird. It did. Yep. So they were, maybe even the flash sales stuff was weird, but they shot themselves in the foot by setting expectations at $3. I'd say right now the best thing they could do is just mirror what Apex are doing, but add a loyalty program.
Yeah, something. Yeah, that's actually a good idea. You should shoot that to Chris. If he doesn't match what Apex is doing, his business is going to go. Look at how many of us said, we're letting our Lilu funded accounts go to push the Apex because it's the bonuses and all that. And I'm one of them. I can't justify paying $90 a month for my funded accounts there. Cashing them out, shutting them down, not even trading them. Some of them. Same thing at Bullinox. I've got 2 there. They actually let me copy before I got to the threshold. But anyway, so yeah, I'm pretty focused in my own cash on the Apex opportunity for at least for the next 2 or 3 months. I think if you're looking to take money out of the market, I think that's the low-hanging fruit. Okay, anyway, let's see. Did he leave Lilu? I thought he left UProfit.
No, he was at Lilu and he got capped. He was doing multiple accounts and he hadn't read the terms. He got capped at the 300K or whatever, so he decided to make them pay. But then the irony is that Funded Futures Network, he left Apex
for the same big
trader
reason,
after
right?
fallout with Daryl. So someone's going to leave Funded Futures Network, and it's all going to go round.
Yep. Well, I think from our point of view, it's about how much leverage can you get as cheap as possible. Basically, we're buying drawdown for next to nothing. I've got a couple of funded 25Ks. I've got $1,500 of drawdown, and it costs $140. You can't beat that. I don't get that leverage in my cash accounts. And with the 20% bonuses on withdrawals and stuff, I certainly think through, March or whatnot. If you're looking to pull money out of the market, that's the place to go. But, we keep saying this over and over again. Any one of these guys could blow up anytime. I think Apex is probably the least likely because they have all those other businesses. But, I wouldn't invest too heavily. I think Bullinox is probably stable. They're low cost producer kind of. But a lot of the other ones,
it's not to pay recurring fees on funded.
Yeah, and they started
withdraw every month, withdraw something every month.
Yep, exactly. That's And be really methodical. Don't try to YOLO these things. You don't need to anymore. When you can get a 25K for $14 or whatever, or when they did the recurring, I have 6 of mine are on that $31 a month forever. And that, until they pass, and that you can't beat that. There's just I can't beat that with cash. So why not? Anyway,
I've
all
got
right.
99 funded accounts, and Lilu ain't one.
There you go.
All right. So yeah, careful who you cheat, you get cheated on. That's the story of the financial markets, isn't it? All right, guys. Do you look at delta by price separate for overnight and RTH or combined? Both. I use a session footprint, Grav, and I also use separated. Like on my 30 minutes, I break it out, so they're separated. I have 2 sets of them, so I can compare Globex to RTH once RTH opens. But on my other monitor, I'm running a session, and I like Lee. My general perspective is the entire session. Globex open to Globex close, including RTH. I think that's the purest interpretation of a day. But you have to really be mindful that conditions change a lot when we open RTH and then when it closes again. So my favorite late new trade is that CME settlement trade I do on Fridays, which is totally based on that exact notion. The equities close, and there's often the futures are out of whack, and so they'll go back into whack, and it's a great trade. All right, I'm going to let you guys out of here. We have a big day coming up. We have the fishing trip, top of at the end of A period, 7 o'clock my time, 10 o'clock Eastern, and let's see. Tomorrow, today's what is it? Today's Thursday, right?
Thursday.
Yeah.
Yep.
Tomorrow, I've got a couple of sessions scheduled. I just kind of want to warn everybody. I'm doing my best here, but we have another major storm warning. So anything that I have on the calendar is subject to being postponed or canceled because of that. But I'm really trying to make them happen. So I appreciate your patience with that. Alrighty, thank you, everybody. Thank you, JBC. Lee, thank you for joining us. It was fun. I always like to hear your perspective on these things.
And we will fun to be here.
We'll see you guys in the
open, everybody. Catch you
later.
later.
All right, bye.